My name is Alan. I'll be taking you guys for your AUE3701. That's AUE3701 auditing module. Okay, so I think you guys you were familiar with your modules that you covered in your second year. You're also aspiring to be a chartered accountant. So with that in mind, my duty or our duty together as a team. I'm saying a team because I can't do much without you guys, and you guys, you will probably learn some few things from the course of this module. So I want us to have an agreement that we are going to work together to ensure that we achieve 100% pass rate, and you guys, you are going to definitely get distinctions. I think that's my goal, and I hope you are also aiming towards that. You'd have to try too hard for you to be able to fail, because our tried and tested methods of teaching at Endunamo, they guarantee success. Not to say if you don't read and then you just show up in exam you'll pass. No, I'm saying if you follow what we say, you are bound to achieve the desired results. So my wish is that everyone that I come across, everyone that I teach, they'll always have 100% pass rate. They'll always have good things to say at the end of the day. Okay, so as part of the welcome remarks, which is what I was doing now, it's also to highlight to you guys that this module, it's easily passable. Like, you can pass if you apply your mind. Okay, so it's going to be more like a transition from your what you learned in your second year, and now you're sort of going to be doing CTA next year. So I assume all of you, you're going to be doing CTA next year. So in this module, you're going to learn the core foundation that you need for you to be able to pass your CTA. So once you master these BCTA concepts that I want to teach you now, we are going to teach you more on that level that even if you come face to face with a CTA student, you are all on the same page. You can easily answer or go through what the CTA student is doing or understanding. So if, even a CTA question, you'll be able to easily attempt it. So with auditing, we tend to be bogged down in detail, in theory, like you drown in the reading and all. But what I'm gonna show you through this is, once you have a skeleton, you don't need to drown in the reading. You're going to be able to master all these concepts, like how you like doing tax, how you like doing accounting. In when I was still studying, most guys would say no, read auditing during the day and do numbers, accounting, manic, and tax in the evening, because it keeps you awake. I'm telling you, after you are done with what we are going to be doing, after I'm done with you guys, I'm sure you can read auditing anytime, because you know where it's coming from and where it's going. The danger of doing auditing when you don't know what you're doing is, when you don't know whether you're coming or going, you end up memorizing concepts. And typically in an exam, they don't want you to memorize, they want you to apply. So when you're asked to apply your knowledge, when you've memorized, it's gonna be a challenge. But as we'll be doing these modules, you'll find that I'll first do the whole section without looking at the slides, so that you have a picture of what we're going through, what the topic is about, so that eventually when we start going through the slides, for you it's like, oh, okay, that's what it was, oh, that's what it was. So in a nutshell, you'll be able to understand, even if it's your revision. If you play a video for the first 5 minutes, you sort of know, okay, this video was on this, that, assuming you'd have read the slides after that. Okay, so definitely, guys, if we work together, if we work as a team, we are going to achieve the desired results. Okay, so like I said, we have our own methods that we thought of, our proposed BCTA structure. Okay, so what is this structure all about? Okay, first of all, you're listening to this audio, you're listening to this recording, you're going through these slides, you are going through indirectly a lecture scenario. We are imparting knowledge, and you're also digesting and diffusing the content and content that we're sharing, and you're making your own conclusions, or you're raising questions. You can raise, like I said, you can raise questions via our WhatsApp platforms. I'm sure you guys were added to the WhatsApp group. You can find me, or you can also email me, you can also call me. So any way that you want to understand what the lecture material or what the topic is all about. Maybe if you want a one-on-one explanation, maybe you're not understanding from the lectures, feel free, because remember, you guys have paid and we want you to pass. That's what you have paid for. Okay, so after the lectures, we're saying for you to be successful, we're also going to give you some quizzes, so soon after each lecture, each topic, you'll be asked to attempt a quiz. It's like 10. The nice thing about it, it's multiple choice questions, so it's 10 multiple choice questions. The multiple choice questions will jog your memory. They will help you understand. Okay, they will help you understand the topic. Sometimes you might assume you understand a certain concept or certain topic, but it's only when you're given a question, if you're tested in depth on that topic, then you realize, oh, okay, fine, yeah, I could have swapped the concepts, or here I haven't understood, or it's sort of a self-introspection or reflection of what you should have understood. Okay, so after those quizzes, we're saying after every topic, you're going to do lectures, you're going to do quizzes, and then for this BCA success to be complete, there's one more element that will be missing, which is exam preparations. In other words, we're going to set some exams for you guys. You're going to attempt them and we'll be marking them. So in other words, we're going to put you in an exam scenario setup before you write your final exam. So this exam scenario setup helps you, visualize or acclimatize or get used to the exam situation. I think in an exam setup as well, the pre-exam setup, it will helps you simulate what you are going to be facing in days to come, or some months to come. So also we will also end up doing 1 or 2 UNISA papers, so that you see you attempt the paper that we set for you, and you also attempt the actual UNISA paper itself. So when you walk into the UNISA paper, you're not trying to understand how it goes. You already know, okay, UNISA paper, on the top left corner there will be marks, on the top right corner there will be hours. Okay, I'll also see the breakdown of the topics that I'm being tested on. I'll also see the mark allocation. So what must I do to attempt every part? I must implement effective time management. What is effective time management? I must distribute the number of hours or time available over the amount of marks that are allocated for the paper, and then I allocate between A, B, C, D. Such exam techniques, you can't learn them in the exam. You will learn them during our exam preparation. We're gonna do exam technique. That's when we do exam technique. Okay, so please don't make any effort to attempt this, because that will be the final nail in the coffin that will guarantee you success. Okay, so not to say that if you don't do the exam papers you fail, but we just want to make sure, remember, it's a method, so you have to attempt all three stages for you to be able to conquer confidently according to our methodology. Okay, so having discussed that, we move on to your learning materials. So before we do anything, we just wanted to encourage you guys to do your study guide and tutorial letters, to pay attention to those. Okay, so your study guide, your UNISA study guide, and your tutorial letters, very important, very important. Okay, then we have this common book. Everyone who's done auditing, they know about this book. It's just called, most people just call it Jackson and Stent. Okay, they avoid the initials. Okay, this book, it gives you in-depth explanation. Some people, you won't feel like you have understood much from these slides. You want to maybe read something like a novel, or something that's more in-depth. We encourage you to go and buy this book, Jackson and Stent. I'm not sure if you have any friends who got it. Then yeah, the latest edition, then you can attempt that. So let's say we're doing topic on auditing procedures, preliminary engagement activities. If you want to go in here, read it in depth, get the actual narrative on it, you go and attempt those. Okay, then we move on to the third point, which is these ones. So with this book, what happens is, this is the psych. We are all governed by PSYCA. You know what PSYCA means? PSYCA is principal professional body for accountants, right? So I'm sure you've seen guys carrying those green handbooks, like the guys who are doing CTA or doing board 1, board 2, they always carry these thick books. So you are also, it's the same book that you will make reference to, but just that the difference is you guys don't take it in the exam, but them, they take it into the exam. So specifically it's volume 2. So if you take the psycha student handbook, okay, volume 2, which is by Deb and Lexis. So that's why I always, if you see on the slides, we always make reference to this book, specifically this book, because that's where the law is. Because remember, we are a professional body, we've got our own, like we are a profession, a fully fledged profession actually. So as accountants, we always make reference to certain rules that are like it's a way of standardizing our actions to try and eliminate some element of subjectivity. Okay, so now this one, now it's got to do with questions. Okay, so it's called the graded questions on auditing 2020. Okay, this one, it's got questions. Also it's got a book with answers, but mostly it's questions. Okay, so you need to go through this book. You find that towards the end of the module, end of the year, we're going to be giving you some questions to practice from that textbook. But yeah, it doesn't mean that you must just do those questions only. Always make sure you do these ones, and you also do your UNISA study guide. Okay, so for practice, then we also need to make reference for you to always keep going back to your other modules that you did in your second year, which is AUE 2601 and AUE 2602. Okay, so for questions, you do this one and this one. Okay, very important, this one, very important, very important. Your UNISA guide is always a starting point, and then this one, it's an extra book for examples, gives you more practice on how to do it. Okay, so you guys, as AUE 3701, you must take note of your assignments. You've got 2 assignments. Okay, you've got these deadlines, and then these 2 have a combined contribution of 20% towards your final mark, of which the exam has 80% towards your final mark, and you just need to attain a combined 50% mark pass rate. Remember, I said you need to try too hard for you to fail. You can't fail this. It's very easy. You're definitely going to pass the exam. That's my motive. That should be your motive as well. You must pass the exam. Okay, when it comes to the year-long module, assignment 1, it's got its date, it's got 3%. Test 1, to be confirmed, it's got 21%. Assignment 2, okay, it's got 6%. Okay, then that means exam has 70%. Final mark, it's 50% for you to pass the exam. Okay, so this slide, it's got to do with the dates of how to pass this course. If you strategize to maximize on all these assignments, maximize on these assignments, maximize on this assignment, and test these ones, get in with a high mark, and then in the exam you give less pressure or less effort required. Not less effort, but less less strain, or from anything else. Okay, so moving on, this is how our lectures will be structured. Okay, you must take note that today we're going to be doing lesson 1, the audit process. Okay, then in our next lecture we'll do pre-engagement activities. What are they? You must ask yourself, by looking at a topic, you must be asking yourself, what is this? What is that? You must understand the topic itself before even reading, or creating expectation or hunger or desire to know something, and then can you be able to recall it even in your sleep. So things should not just be there for you to read and punish your brains. They must be there to improve your brain, improve your lifestyle, and you must also be able to apply it when asked to do it. Okay, so now we have lesson 3, planning and audit. This is a very long one. As you can see, it's got point 1, point 2 up to point 10. So it's got 9. All these ones, these are subtopics of this topic. All these are subtopics. Okay, so it's the same topic. Then we've got this topic, obtaining audit evidence. Okay, then we've got internal control concepts. Then we've got test of controls in cycles, which is the last part of this module. Okay, then you can see, like I said, you're going to be facing the quizzes. So after the audit process, like after today, you'll be presenting quiz 1. After next lecture, quiz 2. After the third topic, quiz 3, quiz 4, quiz 5, and quiz 6. Okay, then the exam will do it later on. Okay, so before we do that, let me take you back. Let me remove this. Let me take you back to this part. Okay, and on this part now, let me just give you an overview of the whole syllabus. Okay, if I give you an overview of the whole syllabus, it helps you understand where you are and where you are going and why you are doing some of these things. Okay, so what is the audit process? Do you know what the audit process is? Like I said, today we're focusing on topic number 1. This is today. Today we're going to be doing this. But for you to be able to understand this, I need you to understand we're going to look at the slides anyway. Later on, we're going to look at the slides, okay, and understand the breakdown of the topic, what it's made up of, and all of that. But with your own brains or own imagination, what is the audit process? Okay, so let me just take myself on a journey of trying to understand what is the audit process. I see a baker. I think of a baker. I see a cake, which is the final product. Okay, but the cake did not just show up. There was a process behind that cake. There were raw materials. There was a menu, or what they call it. Yeah, there was some manual or instructions that we followed. Boil the water, boil the milk, let it simmer for this long, mix the flour with this, mix this with that, leave it simmer like this. Okay, that's the process. Okay, that was incurred, that they went through in order to manufacture the cake. Let's take it a step further. I see an engineer. There's a bridge that has just been constructed. Okay, so what happened? It's not just a bridge. There were 4 processes that we followed before. Okay, these guys, they bought cement, they did this and that. There was some bit of mixture, there was a bit of certification. The inspectors came and inspected. Geologists came and surveyed the area. Can the area withstand the concrete? All of those things, they were done in the process. So an engineer knows exactly what needs to be done before a final bridge is constructed. Okay, so let's bring it back home now for you guys. You want to be CAs. Okay, a CA did not just become a CA. There's a processes they had to learn. But in this case, I don't want to talk about the process of becoming a CA. I'm talking about the process of an audit report. I'm sure you've heard companies being audited. They get audited by KPMG, PwC, Ernst & Young, and all of that. So in the end, when shareholders appoint auditors, they want them to come and do an independent check or verification that the financial statements that have just been presented to them by management, let's not put too much jargon, the shareholders, let's say someone invested money in a company. That person does not have time to be there day to day running the company. Bill Gates, let's say he invests in SAA. Someone is entrusted to run SAA every day. Those are the directors, management, employees, and all of that. So Bill Gates will get us as auditors to go there and verify the financial statements to see. In other words, we are verifying that the performance during the year is exactly what management has presented it to be. Because remember, management, they were keeping financial records the whole year. Now that we're now at the end of the year, they must present their final records, the numbers. If they're saying revenue, we made 1 billion, we are there to check if that revenue is actually 1 billion. You get it? Okay. But for us to get, and then we, after we verify, say it's correct, we issue what's called an audit report. Are we together? So we're saying ultimately the final product is the audit report for accountants. For bakers, it's the cake or muffins or whatever it is. For the engineer, it's what? It's what we say that it is, that bridge. But for us, it's the audit report. But how do we end up issuing this audit report? That's the process. So we're taking you back a step further to say, what is the audit process? If you're saying you're auditing a client, what is the audit process? Okay. So number one, we should know that as auditors, we do what are called preliminary engagement activities. What are those activities? That is what we're going to be discussing in the next lecture. Preliminary engagement activities is when we decide whether to accept or decline the offer to audit a client. So let's say a client comes to offices, oh no, we need to be audited. We need to first evaluate them. You know, there are steps that we follow. There are 4 steps that we follow to evaluate whether to accept or decline a client. Just to give you an example, we need to check their management integrity. Do we want to be associated with such management? What type of industry are they into? You know, it could be porn, it could be some other thing that's very tricky, that affects our integrity. So we have to be able to evaluate whether we want to be associated with such a business or not. Okay. We also need to check ourselves as the auditors. If we are an audit firm that's based down the road, we've got 2 partners, 5 employees, and some helpers here and there, some gardener. We can't be in a position to audit a client that's listed on the JSE, because a JSE listed client, there are many regulatory requirements, and it sides on its own. It's quite humongous. You can't handle it, even though you can decide to outsource and combine efforts with other small companies and do the audit. That's the other things you need to evaluate. Has any one of you smaller companies done a JSE listed client? Are you able to deliver quality audit? Are you able to deliver quality work? Such things are some of the factors that you need to consider on the preliminary engagement activities. Okay, we'll get into detail with that, but I'm just highlighting to you the audit process. So assuming we accept the client, we move on to point 2, which is what? Planning the audit. We start planning the audit. Okay. What do we mean by planning the audit? Okay, so in other words, if we decline the client, if we decline the offer to audit them, that means we don't proceed to point number 2. It ends there. We write them a rejection letter. I'm sure some of you have been dumped by a girlfriend, or some ladies have been turned down by some guys. You know how it feels to be sent a rejection letter. Not a rejection letter in say, but to be rejected. It feels bad, but yeah, someone somewhere is protecting their own interest. So yes, it is what it is. So this is what happens then. So we're saying, assuming that we've accepted the client, we move on to step number 2, which is planning the audit. So under planning the audit, that's when we end up coming up with a audit plan, and we also come up with a audit strategy. Okay, is that so? So I'm sure you guys have heard, you're going to be doing it this time around as well. Planning the audit, this is when you audit plan. It's when you evaluate the risks of the client. So okay, for us to be able to come, okay, I think I should have taken you a step further, that these are the risks at assertion level. So now that you accepted the client, you need to assess their risks at assertion level, at financial statement level. What does it mean to assess the risks of a company at financial statement level? What it means is, at financial statement level, we're just looking at the client, the basics. Oh, they're JSE listed client. So you know the underlying risk of such a client is that there are stringent financial reporting requirements. It's gonna be regulatory. These guys are might manipulate financial records for them to improve their market share price. Okay, the share price. They can manipulate bonus system, other things, and all of those things. So when you respond by adjusting the audit strategy as well. We're gonna dig into that when we get there. And then at assertion level, you look at the client itself. What type of business are they into? Okay, so which line item on the balance sheet or on the income statement is likely to be manipulated? Oh, you see, okay, it's a revenue driven business, so the revenue is our main risk. So what you do now, you develop an audit plan. That addresses the assertion risk. Okay, so in that audit plan, what are you doing? You are just checking the completeness, the accuracy, valuation, all of those things. You are recalculating and all of that. Okay, so that's stage number 2. Okay, so stage number 2. So from stage number 2, we move on to stage number 3. Okay, so stage number 3, what we do now is I'll erase this. Stage number 3, you obtain audit evidence. Obtain audit evidence. Okay, so we're saying you as an audit firm, step number 1, you did your preliminary engagement activities. You decide whether to accept or decline a new client or whatever exists. New client. When you can do it over. Then step number 2, you evaluated the risk of the client and you plan the audit. Now step number 3, you need to obtain audit evidence. Okay, how do you obtain this audit evidence? That's the question to ask. Okay, so this is where you do test of controls. You do test of controls. You can even do them at planning stage. Test of controls and what are called substantive procedures. So in this module, you're only going to do test of controls. That's where you're going to end. Okay, but in the next module, which is AUE3702, you're going to do the next part, which is the more detailed one. Okay, but while on this stage, obtaining audit evidence, you are doing test of controls and all of that. You as an auditor, you're asking yourself, okay, or as a trainee, you're asking yourself, how do we, like, at least up to this point, we've not even discussed who's doing what and who's doing what. You must know that a typical audit firm, right? A typical audit firm. I'll go erase a bit some of these things so that I have more space. So remember, we said you do test of controls and you do some substantive procedures. Okay, so that's that. So you must know, as an audit firm, there's an auditor at the top. SICA knows that. Let's say, for example, PwC, there's the one auditor registered by EBA. But remember, you are there to be trained as well. So below the auditor, there will be an audit manager. Do you still remember these duties from your AUE3701? Below the manager, there's a 3rd year trainee. Okay, below the 3rd year, there's a second year trainee. Okay, below the second year there's a first year. I'm assuming it will be you as you finish your BCTA and you go and join the other smaller firms. Obviously with big four you only have to have CTA to join them. Okay, this is how the structure is when they go and obtain audit evidence at a client. Okay, the auditor is not there all the time, because remember, the when you audit a client, you are going to charge them an audit fee, right? You're going to charge them an audit fee. How is this calculated? It's calculated per hour that you spend there. Okay, so what they need to determine and communicate in the engagement letter is what? The rate per hour. So remember, in step 1, preliminary engagement activities, you need to do an engagement letter which stipulates the rules and like how the audit is going to be done and the rates and everything. Okay, so ideally, maybe let's just, for argument's sake, the auditor charges 1,000 rand per hour, the manager charges, we charge the client 800 rand per hour, right? Let's say the third year trainee, we charge the client 700 per hour. We no, 700 is too much, 500 per hour. So we charge the client 300 per hour for a second year, and we charge them 200 per hour for the first year. So what you must note now is that when we go and obtain audit evidence at the client premises, ideally at the client premises you will find a first year, a second year, and a third year. Why? Because their rates, they will not blow the budgets, and these guys, SAICA wants them to be trained. So SAICA encourages audit firms to send these guys to be on the floor, on the ground, to do the actual audit work. Okay, not to say that whatever they find is the alpha and omega and is the final thing. It's just to say that these guys should have exposure. So in other words, if you're first year this year, next year you upgrade, you go to second year. When you finish second year, at the following year you go to third year. So it means your experience is growing, your exposure is growing and growing each day. So why do they have first year? First year is now, since you're an inexperienced person, you are given the less risky sections, like to tick invoices, cast these things, expenses and all of that. A second year starts doing inventory or starts doing, the other technical things, because you are getting used to the audit setup. A third year now is the most experienced person, because they've been through first year, they've been through second year, and they've been getting mentorship from the manager and the partner, from the different managers and partners. So they are indirectly getting more and more exposure. So in the end, if you look at this now, you realize that after these 3 boys are done, or girls are done with the collecting audit evidence, or after they're done with collecting audit evidence, they pass on the file to the manager. The manager reviews it or gives them queries, they correct, and the final file is sent to the auditor, who's the main partner in the firm. This person is the one who's in charge for drafting the audit report, which is step number 4. Okay, so in all that review and all of these things that are going on, it brings us to the last step, which is step number 4, which is evaluating, concluding. We evaluate, we conclude, and we report. Okay, so in other words, they are evaluating the audit evidence that has been collected. In other words, they are evaluating the audit work that has been collected by the third year, second year, and the first year, plus what has been reviewed by the manager, and then they evaluate. The auditor is evaluating that work, and they will make their conclusion. They will discuss with those charged with governance, and then they'll be able to issue the audit report. So step number 3, we said you only do test of controls. Step number 4 you are not doing this. You are not doing this in this module. You guys are ending on step number 3, or let's just say 3.1, not 3.2. So you're doing step number 1, step number 2, and part of step number 3. Step number 3, the last part, and step number 4, they make up next semester's module for you guys. So like I said, number 1, it's prelim engagement. Okay, number 2, we said it's you now planning the audit. Number 3, you obtain audit evidence. Number 4, you conclude and report. That is the audit process. So you first decide whether you want to accept the client or not. You draft an engagement letter with them. Next step, you do the planning of the audit, you obtain audit evidence, and then you conclude a report. This is the typical audit process. So you guys will not be doing partially step 3 and step 4. You are doing half of part 3. Okay, so all of this is what you'll be focusing on in this module. That is what the audit process is. So now if someone asks you what is the audit process, you'll be able to tell them with confidence that this is what the audit process is all about. Okay, so moving on, now that you know what the audit process is, later on, I think now step 2, you know what preliminary engagement activities is, planning an audit is, and obtaining audit evidence is. Okay, you know what internal controls are, what in test of controls are. You realize that all of these topics are basically everything that I've just explained to you now on here. It's basically everything that's here. Okay, just that it's going to end here on step 3 on test of controls and not substantive procedures. Okay, so everything, audit process, preliminary engagement activities is number 1, planning an audit is number 2, obtaining audit evidence is number 3. But how do you obtain audit evidence? You obtain it through test of controls and substantive procedures. Okay, just that you're doing only test of controls. That's where you end. So you are ending at step 3 of the audit process. So we said, let me just clear everything. On the audit process, this is step number 1. Planning an audit is step number 2. Obtaining audit evidence is step number 3. And then this is part of step number 3. All of this. So step number 4, you do it in the next module. Are we together? I think up to this stage, you know where we're coming from and where we are going. If you're not sure about anything, please feel free to inbox me, WhatsApp me, message in the group so that everyone else can hear, or any other way you want to, which is comfortable with you. Okay, so we've checked the quizzes. So after today, I'm gonna send you a quiz as well so that you can attempt it. So topic number 1, we're gonna get started right away, which is the introduction. Okay, auditing concepts. I'm supposed to explain to you what the audit process is. Like I said, the audit process, our main objective is to what? Express an opinion on whether the financial statements are free for. We are there to express an opinion on whether the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. If you remember, that's where I gave you the example of Bill Gates investing in SAA, and we are called in to give an opinion. So that opinion, we only give it at step number 4 after we've done everything at the top. we've collected audit evidence, we've planned the audit, we've done all of those things. Okay, so that's what it means. Yeah, so to do this, the auditor needs to go through the audit process. That's what I was saying. And I was also saying that about, okay, they should be, if they are free from material misstatements and all of that. So in general, misstatements, okay, so in general, misstatements including omissions are considered to be material if individually or in aggregate they could reasonably expect to influence the economic decisions of users taken based on the basis of the financial statements. Okay, so once we've covered that part of the audit process, we need to understand something called communication. Communication is key. Communication is everything. I'm sure you know, if there's a girlfriend and boyfriend relationship, if you guys don't communicate, it will break. Okay, sometimes it will break. Sometimes if you talk about communication, if there's no communication, there's speculation. You assume the wrong things about the next person, or you could be thinking the right things. Either way, it's got to do done in the right way. So the key thing between the auditor and the client, a client is your friend. They are looking at you for coaching and improvement. Those are the honest ones. But there are those types of clients who are actually looking at manipulating and overriding or bypassing your controls. So it can be two ways. So that's why I'm saying that what it's supposed to be is that the auditor should establish a two-way communication between those charged with governance and himself. What it means is, sometimes you might think this thing is wrong, or you might just assume that no, this is fraud, or this is not the right way of doing things. But don't always take it up your own sleeves to say it's wrong. No, you must first hear what they have to say about it. It must always be you asking them and them replying, and then you making a decision or conclusion from it. Or not just that, you also ask them but why they are doing it that way. It's dialogue. You must always believe in dialogue. That is the only way things will get better for you. So in doing that, by establishing that two-way relationship, it's all under ISA 260, and ISA 260 ABC. That is developing both the working relationship and the understanding of the auditor. You must be also obtaining information for the audit purposes. Like I said, you'll be asking them, and it will be also assisting you in the organization to fulfill its financial reporting duties. Okay. So, having said that, we move on to the study references. So for you to understand what I've just been discussing, you must read these references. ISQC, AUE, that's your last year's modules. You do Learning Unit 1 and Learning Unit 2.4, and that focus on framework for assuring engagement and revision of auditing concepts. Okay, so having looked at that, we move on to the audit process. Now you can see the audit process in a pictorial view. Okay, so as you can see, we said this is step number 1, this is step number 2, this is step number 3, and this is step number 4. Okay, so looking at the module allocation, we say step number 1, that's yours. Step number 2, that's yours. Okay, it's yours. Then step number 3, you can see it's branched into 2. You only do performing of test of controls. Then these 2 are in your next semester's module. So you are only doing this, and this. Okay. So in also doing that, you will notice that we have a big block on the left here. These are the rules and regulations or legislations that you need to understand that guide the audit process. There's the Companies Act, there's the Auditing Professions Act, there's the King 4, and then there's the Code of Professional Conduct, the SAGA Code of Professional Conduct. So all these 4, they cannot be underestimated. These are topical subjects. These are our rules or our Bible when it comes to accountants. Companies Act, APA, King 4, and Code of Professional Conduct. And we said you are doing this is all. These two are under audit plan, and then this one, it's got two wings. You're only doing the left wing, not the right wing. This is all for next semester. I explained in detail what the audit process is. If you can replay the message, the notes, you can come out, you can understand it better. Okay, so those things on the left, these ones, these rules and regulations, they are now explained in detail on here. Okay, CPC. What is a CPC? It's the framework that governs our ethics and conduct. It's commonly referred to CICA Code of Professional Conduct for CASA only or ABA affiliated people. Okay, what is the Auditing Profession Act? It's a legal framework. So you must understand there's a rule difference between rules and regulations. So it's a legal framework that governs part of the audit and specific requirements for auditors. So it's for auditors only. Okay, Companies Act, it's a legal framework as well that governs all companies with specification that it also impacts auditors. So it governs companies only. King 4, what is the King 4? I'm sure you've heard about it. It governs companies only. It's a framework for which you should always keep in mind. It talks about audit committees, social and ethics committees and all of that. We also have ISQC1, which is the quality control framework for auditors. Okay, the ISAs, they affect the entire process. Okay, so we talk about pre-engagement activities, we talk about planning. Okay, so you are also going to be taking note of those, reading those rules and regulations. You're going to be reading the laws, the regulations, and the principles. Okay, applicable throughout the audit process. So you're going to do it's going to be made reference to as you go through the audit process. Are we together? What is the audit process? We said is that step 1, 2, 3, 4. As you go through step 1, 2, 3, and 4, all those things, Companies Act, Code of Professional Conduct, they will always be intertwined and used often. So you must just be familiar with them. Okay, so looking at that part of the auditor's process, the main thing that the auditor should keep in mind in all this is their independence. There's nothing as bad as you entrusting someone to be independent and then they turn out to be actually implicated or to be part and parcel of the rot of the process or the system. That on its own is damaging. That on its own is affecting our profession. That on its own is just not doing us right. So we are paid to be independent. We are paid to issue an impartial opinion. We are paid to be the eyes and ears of the shareholders or other stakeholders. It might not just be stakeholders, it might be banks. If these people want to go and obtain loans, the banks count on our financial statements to be able to make a decision to give the loan or not. So you realize that we play a significant role in all of this. So in all of this, we must understand that our independence is very important. But what type of independence are we being encouraged on? We must be independent in mind and also in appearance. Our minds should be completely independent, and also our appearance. No, we can't just be saying we're independent and we are seen drinking beer with the same people, or we do business with the same people on the side. That on its own raises many flags. Okay, so we have to be independent in mind and in appearance. Okay, so we are going to learn a lot of principles here that guide our actions. We talked about rules, regulations. On this part, we talked about laws, let me just mark it. We talk about laws, regulations, and principles. In this particular instance, we're talking more of principles. What are the principles that guide all accountants or auditors? Okay, so we're talking about, on the left, we're talking more about the SICA Code of Conduct, which is here at the bottom left. This is what we're talking about, this one in this box here. So we're focusing on the, before even beginning, how is the auditor supposed to act or behave? Okay, the code of, so what does the SICA Code of Professional Conduct say? Okay, so SICA Code of Professional Conduct, the objective is that you should be able to identify and discuss the principles obtained in the SICA Code of Professional Conduct, and then from a scenario you must be able to identify what was done wrong from what is mentioned, and you must also be able to identify what was not done at all. Okay, which can be tricky to identify. So what it means is, if you are asked in an exam, or if you are given a scenario, if they tell you that no, so and so is related to the financial director, is related to the auditor, so you mean that what type of threat is that? It's a familiarity threat. So you must understand that you're gonna we're gonna know what are threats and what are the principles. So you must know the link between the two, like which threat is violating which principle. Okay, that's why the SICA Code of Conduct. So it's not your first time learning about this, but your study material is SICA Code of Professional Conduct, ET pages in the handbooks. Okay, so let me move on a bit and give you more info before I go to my whiteboard. You know, I like this whiteboard because this board is where we simplify things and illustrate better. So whenever I say let me go to my whiteboard, you know we're going to this board. So let me go back to this part. Let's move on a bit, and then I'll take you to the whiteboard where we disseminate everything and dissect the concepts so that you understand what we're talking about exactly. So what you must understand is that, remember we said we're a profession. So certain professions, you know, there are rules and regulations. If you violate a principle, there are consequences. Why are there consequences? Because you must understand, they are trying to let you understand that, you know, wherever you are, you represent the many. So one bad apple cannot tarnish the image of all these millions of good apples. So that is all. So on the technical side, there are rules and laws, but this is more on the behavioral side. You know, obviously you can't coach everyone or control everyone, but you can set guidelines and principles that guide or govern. You know, you set boundaries. You tell them no, you can operate as whichever you want, but as long as you don't violate these boundaries. That is what this topic is all about. Auditors' independence. You can do anything, but you can't violate these boundaries. Okay, so reliance is placed upon CASs and registered auditors, okay, to ensure their service is to the highest ethical standards. Okay, so what is ethics? I'm sure you did a module on ethics. It's got to do with the morality. So to say that our behavior has got to be the highest moral standards. Chartered accountants sell their professional service is their product. So we sell our time as our product, and therefore reliability on that information is the core of the profession. So that's the core function of our business. Okay, so SICA governs all CASs and ensures that they are seen to be reliable. We have to be reliable. That is our justification for the audit fees and everything that we charge. Okay, what distinguishes a chartered accountant from other professions? It's because us as chartered accountants, we accept the responsibility to act in the public interest. So we are the judges or the subs of the public. Okay, responsibility is not exclusive to satisfy the needs of an individual client or employer. Okay, so we're not there to satisfy the needs of an individual client or employer. We are there to be impartial. We are relied on. So public interest, this means we are scrutinized. Anything that we do wrong, you've read about these companies on the news. Anything that they do wrong, it affects everyone. It impacts us and it's affecting the public. So all in all, when you think of that now, it shows you now that we are, so much trust is placed on us. We are the eyes and ears of many people. Many people look up to us. So we have to look upright. Like, that's why we're going to be dwelling more on this topic of auditors' independence. Without wasting much time on one section, let me take you on a journey. So, like I was telling you, that the Code of Professional Conduct. So, Code of Professional Conduct, Section 290 on independence. It talks about independence in mind and in appearance. So you must be able, in mind, that means you must be able to express an objective opinion, not compromised, right? Or not compromise professional judgment. In other words, if there's a situation where maybe your crush, she works for a certain company that you're supposed to audit, you must disclose that and avoid being on that audit, because remember, you're going to see this person later after work. So that on its own can impair your judgment. You end up saying the wrong things because you want to impress one person, but the implications are far reaching. They are much more reaching than your selfish personal interest. So that's why we say in mind, independence in mind is very important. You must express an objective opinion which is not compromised. In appearance, I mean circumstances. If people are to see you, that may lead to a reasonable third party to believe objectivity was compromised. If you are seen drinking together, you do alcohol together, you go to the same church, you go to the same mosque, all those things, you must be seen to be independent in mind and in appearance. So those things, you should avoid them, because remember, everyone's looking up to you to be the judge. Remember, now think of it as a judge. Your brother, your friend's brother was murdered, and you see the judge drinking with the murder accused person who's on bail. What comes to your mind? You think, this is a done deal case. These guys are drinking together. There's no way that this person can be sent to jail. The same way applies to us accountants. If people see you associating more, or maybe if you are known to be associating with that person, and it is just hard for you to get the same comfort if such people are too close. Okay, so moving on, auditor's independence on its own. Let's read what the Code of Professional Conduct says. Okay, so when accepting an engagement or a client, a chartered accountant shall, okay, when you hear the word shall is an instruction. It's an instruction. It's a strong worded instruction. Okay, so they're telling you that when accepting an engagement, maybe it's an audit, or a client, maybe someone who wants bookkeeping services, a chartered accountant shall identify threats to independence. That means you have to identify those threats. What are those threats? There are 5 threats. What are they? We're going to talk about them now. Familiarity, intimidation, self-interest, advocacy threat, and all of that. Okay, so you must also evaluate the significance of the threats identified. Okay, so you must identify, okay, fine, I'm familiar to this person, so what is the significance of that familiarity? Okay, in the bigger picture or bigger scheme of things, okay, this person is my sister, so there's no way I can pass an opinion that will put their company in jeopardy, because that person will get their company closes, they'll come and stay with me, and I'm the one who's supposed to pay for the bills, and I'm supposed to also take care of her kids. No ways I'm gonna pass that judgment. You see, so you are being partially cornered. Okay, so you must also, in the end, it says that you must also apply safeguards when necessary. Why are you applying the safeguards? You are applying them to eliminate or reduce the threats. Eliminate, it means completely. Reduce, it means it's still there. but it's no longer that significant. Okay, to an acceptable level. That's all we do. Okay, so what are these safeguards? If I notice that it's my sister, I know yes, she's my sister, but at the end of the day, the right thing needs to be done. So what do? If the right thing needs to be done, it's a safeguard. I pull myself out of that audit and I replace myself with someone else who's more independent, and I don't follow up, I don't interfere, I just let the justice run its course. Okay, I just let the whole audit process be followed and be fulfilled, and whatever opinion it comes out of there are no personal feelings. I don't go and hate the person who passed that opinion, because remember, we are there to protect our profession. Imagine working for 7 years to get that CASA designation, and then all for one person to ruin it. You want to safeguard your qualification. So when the chartered accountant determines that appropriate safeguards are not available or cannot be applied to eliminate the threats or to reduce them to an acceptable level, the chartered accountant shall, another instruction, what shall I do? I shall eliminate the circumstances or relationship. So in other words, if I can't reduce that risk by maybe excusing myself or giving it to my friend, I mean, we have to terminate that relationship. Okay, we have to, or the relationship creating the threat, or decline or terminate the audit engagement. So you can decline or terminate the audit engagement because it's a risky one, and there's no way you are in a position to reduce it to a reasonably low level. So in all of that, I would then want you guys to understand that when you're answering a code of professional conduct question, okay, for now, I want you to picture this. You're going to be able to identify the threat. Okay, so the key thing is the threat. Under that, you also have to understand what are the principles that we as auditors adhere to. Step number 2, step number 2, you evaluate significance. Let me do it this way. You evaluate significance, right? Significance of the threat. Okay, then lastly, you apply safeguard or safeguards. That is what these points emphasized on here, and you can see it's taken from CPC. So you identify the threat, you evaluate the significance, and you apply the safeguards. This is a very topical thing when it comes to you guys. If you're writing I think from marking board and marking CTA, I've seen how these questions come up, and because people get to board and are writing CTA, they think they're now senior, they forget the basics. So this is the basics that I want you to memorize, not to memorize, master it, and then you take it into the exams, or even if it's board or wherever you end up, you must always remember this. So as an example, if I'm related to the sister, okay, identify the threat. So the threat is familiarity threat. What principle is it going to affect? Remember, as accountants or CAs, you are supposed to act with professional competence and due care. So we link the two, that it's a familiarity threat to my professional competence and due care. You see, we've linked the two. Okay, the significance, you go to the next bullet point, evaluate significance of the threat. This is a significant threat because because we are related and it can affect the audit opinion. So you are sort of elaborating or justifying why you think it's significant or not. So yeah, it's all about saying, is it significant or not? Yes or not? Okay, then apply safeguards. That means I can be excused and it can be allocated to the next person. You get it? So that's what this part will be. But as we do the quizzes and all, that's when you'll be understanding or mastering it even better. Okay, so threats to the auditor's independence. Okay, so in this part is focusing on threats to independence. What are those threats? Let me just put threats. What are those threats? Threat number 1, self-interest threat. Okay, so we've got self-interest threat. What is self-interest threat? Self-interest, like if you ask self-interest threat, it's got to do with something that you have that you are interested in, something that can benefit you directly or indirectly. So there's some vested interest or some vested benefit for you in it. Okay, so self-interest threat is that a financial or other interest that I said will inappropriately influence the CASA's judgment or behavior. For example, a team member having a different financial interest in assurance client, or a firm having undue dependence on total fees from a client. So this is the most common one. When these audit firms, they are auditing one of their major fee contributors, you realize that you can't really just disqualify their modify their financials. You probably play it safe because that's your major source of income. You can't just be bossy and like you've got 100 clients, it's one of your biggest, so you play it safe. So that's what this section says, section 100.12, 200 and 300. They're saying the threats to independence, what? Self-interest threat. Okay, moving on. What's the other one? Threats. The second threat is self-review. So these ones, they are similar in that they all start with self, but they have a different meaning. Self-review. What is the self-review threat? If you prepare a if I have asked to do some tax consulting work, and then in the end of the year, you're asked you are doing the audit as well. You cannot, if you are reviewing the same work that you did, it's like a self-review threat. No one independent has had a look at it. So self-review threat is got to do with you reviewing the work that you've probably had done yourself. So what does the standard say? It says a threat that a CA will inappropriately evaluate the results of a previous judgment made or service performed by the CA. So you'd have made or done that service. Okay. So a firm having prepared the original data to generate records that are subject to assurance engagement. So a member of the assurance team being or having recently been a director or officer of the client. So these are examples of self-review threats. So a firm, like let's say I have an accounting firm, like we're an audit firm, but we have also an accounting section. So if our accounting section is the one that was involved in the preparation of the original financials, so our accounting department did it, and then we come and we audit, that's a self-review threat. Or a member of our team, like our new partner, was the auditor, was the director of that company, then that means it's a self-review threat as well. Okay, so self-review, you should be able to master that one. Okay, advocacy. So you must be writing down advocacy threat. Okay, what is the advocacy threat? In your own words, what is the advocacy threat? Advocacy threat, if you think about it, advocacy, you're speaking or you're putting in a good word for someone. So advocacy threat, it's like you're trying to get your client connected or to give him an edge, because in the end you also have a vested interest in them. So what does the standard say? They say advocacy threat is the threat that a CA will promote a client's position, okay, like what I was saying, to the point that the CA's objectivity is compromised. So you are pushing it beyond the limits. Like I said, you must behave in a box, but you mustn't push the boundaries. Okay. You mustn't push through the boundaries. Okay. So an example could be the firm promoting shares in an audit client. So now you're pushing people to invest in your audit client because honestly you want them to do better. Chances when they grow, you also increase the audit fees. Or a CA acting as an advocate on behalf of an audit client in litigation or disputes with third parties. Okay, you might be called to testify in court, and you obviously try to push the client's position. Okay, so having done with advocacy threat, let's move on to the fourth one, which is familiarity threat. I have explained much on this one. It's more to do with relationships or being related. It's a threat that due to a long or close relationship with the client, okay, it could be not relatives as such, but maybe friendship or something like that. A CA will be too sympathetic. Like I said, you'll be too sympathetic, and you're also too accepting of their work. For example, a member of the audit team having a close or immediate family member who is a director or officer at the client. Okay, so my sister, if she is a director or officer at that client, it's likely to make me behave in a sympathetic way. Or a CA accepting gifts or preferential treatment from client. Once you explain more about the gifts, you've seen it on TV how gifts can have been used to manipulate many people. Once you accept significant gifts, it's not just gifts, it's those significant, the material ones, that's where you have problems now. Because if the value is clearly trivial or inconsequential, it's okay. But once the value grows or becomes material, we have a challenge, because that on its own can soften you and can result in you being bought by the client. So intimidation threat, what do you think it is? 5, it's intimidation threat. Intimidation is all about being scared or forced to scare away. Okay, it's more of self-interest as well in a way, because if you think about it, if they tell you if you pass the audit opinion, this certain type of audit opinion, we are going to terminate your services as our auditor, and they are your biggest audit fee generating client, what are you going to do? You're likely to be impartial. You're likely to be affected. You're not going to pass that impartial decision because you know what's coming your way. So what you do, you must reduce that threat to reasonable level. So intimidation threat is the threat that intimidation threat is the threat that a CA will be deferred from acting objectively because of actual or perceived pressures. So it's got to do with pressures, including attempts to exercise undue influence over the CA. For example, a firm threatened with dismissal from a client engagement, or a firm threatened with litigation by the client. So you see, all of this impacts the auditor's independence. So the auditor won't be ideally in a position to act independently. So now, what are the safeguards that need to be applied? So now we move on to the second part. What are the safeguards that need to be applied? Safeguards. What are safeguards? Safeguards are actions or other measures that may eliminate threats to reduce them to an acceptable level. Okay, so there are two categories of safeguards. Let's erase this. The main thing is two categories of safeguards. So there are safeguards created by the profession, legislation, or rules, or there are safeguards in the work environment. Okay, so that is key to know. But okay, work environment can be leadership, culture, policies, rotation of senior personnel. That's what you can do in an audit firm. But also there are other issues that are the legislation, which is, let me hide, which is what these laws and regulations require. It's probably educational training, experience requirements, continuing professional development, corporate governance, professional standards, or professional or regulatory monitoring or disciplinary procedures. They know those ones will force you to apply safeguards. Okay, I'm not sure if anyone up to this stage. So safeguards are not set in stone. Safeguards, they are relevant to the scenario. So as long as you say something that applies to the scenario, then you are good to go. Don't just guess. Your safeguards should be applicable or relevant to that scenario. Then you demonstrate your understanding. Okay, don't worry, I'm gonna give you multiple choice on this, and then you see, you sort of test your abilities on what you have done so far. Okay, so now looking at this now, independence, let me mark this, independence, responding to the threat. So we're saying if you identify a threat, you must respond to it. Like, if you are saying there's a familiarity threat, there's an advocacy threat. So what is the problem? Like certain situations, right, or relationships may pose a threat to the auditor's independence, but that's not the problem. Threats, the compromising part, that's where the problem is, because compromise CA's ability to perform an audit with independence. So we discussed before examples. If you can also list any examples. So now, responding to threats, you must determine if the threat is at an acceptable level. So that's where I was saying step 2, you must evaluate whether it's significant or not. So if not, then you must determine if there are any safeguards that can bring the threats to an acceptable level. But what happens now if there are no safeguards? This is the question to ask. What happens if there are no safeguards? What do? You are required to decline or discontinue the specific professional services involved. That's what you must take note of. Okay, so auditor's independence, right? Remember I said there are those 3 things that you must take up to when you qualify as a CA. This is a tip, and a very important tip from my friend there. It's an idea. It's a very important tip. Remember we said we must identify the situation that is threatening the auditor's independence. Okay, after that you must evaluate the significance of the threat. After that you apply safeguards, whether it's law or work environment. Remember we said there are 2 types of safeguards: those enforced by the law or those that can be implemented in the work environment if possible. Then after doing that, you score maximum marks. After doing that, you've done justice to the question. So that is what it was on auditor's independence. That is what everything it was there. Auditor's independence, that is what everything it was, or what is entailed there. But what is auditing without an example? We can decide to do an example to illustrate everything that we've learned today. Okay, you can do it in your own time, or you can do it with me now. Okay, so if you want to move on and do something else, you can cut now, but I encourage you to stick with me and let's try and do this example, which is on threats to auditor's independence. Okay, let's attempt it. So you are an audit manager. So remember, when you say you're an audit manager, remember that time I illustrated to you that it's the auditor at the top, below him it's a manager, then there's a third year, then there's a second year, and then there's a first year. Okay, this question says you are the audit manager. If you are the audit manager, it means there's one person above you and there's 3 people below you. That's the key thing when it comes to auditing questions. You must understand where you are in the question. So in this case, you are the, let's start again. In this case, you are in audit manager at BCTA Inc., right? So BCTA has just been appointed as the auditor of Mr. Independence. So this is a new client. So you must be taking note of these things. Okay, it's a new client, it's a listed company, so I mean it's on the JSE, and Mrs. Auditor, meaning the audit partner. So if you're saying the audit partner, that Mrs. Auditor. So the audit partner is Mrs. Auditor. Audit manager is me. Okay. The finance director, Miss Auditor, the audit partner, the finance director at Mr. Independence, and you are all CA. So that means we are all chartered accountants. So that means we're all governed by the Code of Professional Conduct. That means threats, safeguards, threats, significance of threats, and safeguards. So Mrs. Auditor, right, which is our auditor, has informed you. So my audit partner has informed me that she is a long-time friends with the financial director of our client. What's that threat? It's a familiarity threat. Okay, Mrs. Auditor has a 20% shareholding in Mr. Independence. So that's it. What is that threat? She has 20% shareholding in Mr. Independence. That on its own is self-interest. Okay. BCTA has been preparing the financial statements for Mr. Independence for the last 3 financial years, which include the year which BCTA has been appointed to audit. What does that tell you? Remember we said if you are the one preparing the audit work papers and now you have to audit them, that becomes self-review. You get it? Which include the year, BCTA has also prepared tax returns for Mr. Independence during these years. So all of that, it's all self-review. The financial director, right? The financial director has indicated that he is close to the audit committee. Audit committee members, and the audit partner can easily request you to be removed from the audit team should you not agree with him on any issues. What is that? That is what? Intimidation. Okay, so you're being intimidated. So do you think you can still act independently once after you've been told that? You can't. Okay, so moving on, the audit fees for this engagement forms 75% of our revenue. Okay, so if this is one of our biggest clients, we can also say this is a self-interest thing for us. That's all. Can it be advocacy? No. Not to say no, but it depends how you explain it. But I'm just trying to unwrap everything that we've discussed before. Okay, then Mr. Independence has offered to repaint the building owned by BCTA at no charges, as it was painted 15 years ago. Remember, we said those are the gifts. If those gifts come, they pacify you. What threat was that? You need to identify that. Okay, so this page, I think we've done justice to it. So now, the required says, explain whether or not your firm should have accepted this audit engagement. So they're asking you, explain whether or not you should have accepted. Explain means you must give your reasons whether or not your firm should have accepted this audit engagement. So it's more or less on the preliminary engagement activities, which is step number 1 of the audit process. Okay, so you may assume that the audit firm will not be able to acquire the services of another suitably qualified audit manager and audit partner. So they're saying, as part of your safeguards, you can't say we'll put our own or we'll put this one on. But what do you think is your audit approach on this one? How would you approach this question? Because it says explain whether or not your firm should have accepted audit engagement. What I would do is I would probably identify every threat, evaluate its significance, and state whether I can apply any safeguards. Evaluate significance, yeah. Then you state whether you're gonna apply any safeguards. So in other words, we have identified over 3 or 4 threats from the scenario. Then after evaluating each and every threat between threats, significance, and safeguard, then I'll apply what's conclusion. Do I think we should have accepted this? This is what is required by the client. Okay, so let me give you 2 minutes to just quickly brainstorm how would you answer this question. Not that 2 minutes has passed. I was just wanting you guys to check on your integrity. I know you guys could have actually done what I asked you to do, to really think about it. Okay, my thought before I paused it was to say, you know what, each threat you must identify it from the scenario. You must evaluate it. You must, when you identify, you must describe how is that a threat. Okay, evaluate its significance, and then you also apply the safeguards. But you noticed as we were going through the question, I was identifying it and explaining why I think it's a threat. Okay, so let's see how you structure the answer now. You see, you start off 1, 2, but you see, you identify the threat. There is a familiarity threat to independence, right? So you say familiarity threat to independence. So you mustn't just say familiarity threat, you say to independence. Why? Since the audit partner has a close relationship with the financial director, as they are long-time friends. Where is that coming from? It's coming from here. They told you they are friends, long-time friends. Okay, so we're going line by line. Okay, what else? Okay, so you've explained that, you've explained the threat now, that it's a familiar threat to independence. Why? Because these two are related. You've done the explaining part of the threat. Like I said, it's a 3-stage process. You don't just end at the threat, you go to evaluate its significance, and you also evaluate its safeguards. So now, second part is now you're evaluating the threat is significant. So in other words, you have judged already whether it's significant or not. So in this case, we've said the threat is significant. Why? As the financial director is responsible for the financial statements, right? That BCTA will be expressing an opinion on. Because in other words, we are the ones who are going to be expressing the opinion on those financials, even in as much as I'm the manager. Because remember, I'm the manager, that's me, but my boss here is the one. So it's gonna be my boss expressing an opinion on their friend. So if these people have been drinking together, doing things together, I don't know which things, then now they want to express an opinion on each other. There's no independence there. That's what this second point is illustrating, basically, to say that yeah, this threat is significant. So now what type of safeguard can you apply to such a threat? Do you excuse yourself, or do you rather not do the engagement itself? So Mrs. Auditor should not be the audit partner on this engagement. In other words, we're saying my boss. So in other words, we're saying my boss, this one, Mrs. Auditor, should be removed. And we bring Mr. XY, we bring XYZ instead. That way we know there's no corruption there. Okay. Happy? I think by the time we're done with all the threats and significance and threats, identifying with all the identification of threats, evaluation of its significance, and then applying safeguards, by the time I'm done with this example, you guys will be very, very comfortable with this topic. Okay, so the second thing that we identified on the way, it was this self-interest rate, that 20% shareholding line. Okay, so that was our second worry. Okay, so just to mark, let's erase this. This is interest number 2. There's a self-interest rate to independence. Okay, never leave that self-interest rate to independence. Why? Because since the audit partner that means our partner in our audit firm has an interest in the audit client. So if an auditor owns shares in a client, that's a self-interest rate. Okay, that's the 20% shareholding held in Mr. Independence. The threat is significant. In other words, we've already concluded whether it's significant or not, as 20% can indicate significant influence. Obviously, if everyone else owns 5%, 5%, 7, 8, we don't know. So that can be significant. So what should be done? Should we continue with this audit or not? That means Mrs. Auditor should not be audit partner, or should not be performing the engagement. Again, we are saying Mrs. Auditor should be removed. Okay, that's what this part was all about. Okay, then moving on, there is a self-review threat to independence. How is that so? We said self-review is because of we have been doing a lot of work. We prepared the financial statements and we've been doing the taxes as well. Okay, so there's a self-review threat to independence, since the BCTA prepared the financial statements and tax returns for Mr. Independence, which will be audited. So in other words, we are going to be auditing what we prepared previously before being appointed as auditors. Is that significant or not? Something to ask yourself. Is that significant or not? I would say it is, because there's no third party that's involved in this transaction. It's just us and us and us. That's all. So since there's anything that points to this being incorrect, could affect BCTA's reputation. So obviously, if anything is wrong there, it affects our reputation. There's no way we can be exposing ourselves. So BCTA should not accept this audit engagement. So, and we shouldn't have accepted this audit engagement. Okay, then that's number 3. Number 4, it's advocacy threat to independence. Okay, so this is because since BCTA, we have to speak or respond to SARS on behalf of BCTA regarding the tax returns prepared by BCTA. These tax returns here are the ones we will have to speak to SARS to, and they are the auditors as well. The threat is significant, since anything that points to these being incorrect could affect our reputation. So BCTA should not accept this engagement. But remember, let me show you something. Do you think they would refuse to accept these clients, this audit, when it forms 75% of their revenue? Highly unlikely. Highly unlikely. I doubt it myself. Okay. So the last, not the last point, the last section, last two maybe, there's the intimidation threat to independence, since the financial director has indicated that he will get the audit committee and the audit partner to remove the engagement manager. So they will get me removed if I refuse to agree with the financial director's views. So the threat is significant already, because there might be errors that will need to be corrected. But now, because I've been told I can be removed, imagining that I also have a family to feed, what will I do? My independence is impaired. Okay, so regular review of the manager's work should be performed by the audit partner. But is that still relevant since the audit partner is also captured? You see, that becomes a challenge. We move on to this one. There's a self-interest or intimidation threat to independence, since BCTA has a financial interest, as the audit fee makes up most of BCTA revenue. Like I said, it makes up 75%. So 75%, it's a significant amount. It makes a difference to the audit firm. So they'll do everything to protect it. So what are we saying? We're saying this threat is significant, as losing this client could have serious financial implications on BCTA. So you must be asking yourself, this threat, do you think it's got big impact on independence or not? Okay, a quality review partner should be assigned as a safeguard. So this becomes a safeguard. Are we together? Okay. Let's look at this one. The free painting gift offered can be construed as a gift, and there's therefore a self-interest threat to independence due to the financial value of the gift involved. So the value of the gift matters. Okay, so if you're given a 1 million rand painting, you can easily sell it and buy a house. So indirectly, you've been bought a house. That's how they give gifts. Now these gifts are given in industry. It's in the form of maybe a diamond ring, or maybe something of value, gold coins. All those gold coins or something. They don't tell you directly that we're buying your house, please do this for us. Okay, if the financial value is significant, you know that the threat, the high chances that it can manipulate you are very high. In this case, you can't say no because the threat is very significant, as the cost of painting building is not trivial, as specified in CPC. So the gift should not be accepted. That's the safeguard. So the safeguard would be to refuse the gift or to excuse yourself from the audit. But in this case, it could be not accepting the gift. There's no hard and fasten or there's right or wrong answer to it, but it's all to do with how you explain it. It has to be relevant in the circumstances of the scenario. So in conclusion, remember I said you explain all the points and then you give conclusion. Where did I say that? I said that you do everything, but you must also give a conclusion, because the question asked you to explain whether or not. So you can either agree to say yes or to say not, but you would have scored your points by describing these things, these threats. Okay, so whether or not you accept the audit, we should have accepted the audit engagement. So it's a matter of judgment now. So what will be a conclusion? I would say we should not have accepted this engagement due to its significant threats. So there were a lot of significant threats in there, and the audit partners independence as the firm, and the audit partners independence as the firm can neither replace the manager nor partner and cannot assign a different manager or partner. So remember, the required said we can't assign a different person also. So the best way is we should not have accepted the audit engagement. Is that so? So in all that, I'll take you back to the scenario itself. You see, we managed to pick up all the key things from the scenario, so it made it easy for us to explain, to identify, because just identifying the threat is half the job. Just identifying self-interest threat, self-review, familiarity, self-interest, intimidation, that is half the job. Not even half, it's 1/3 the job. The full thing is for you now to evaluate the significance of each threat and also apply relevant safeguards. That's the most important thing. So in all this, it's just teaching us that, it's not enough for you to just do one part and leave it. So for you to score maximum marks, you must be able to identify the threat, evaluate its significance, and apply the relevant safeguards. And from this example, you can clearly see how each point was tackled and how each point was explained. And this is just what you need to master. After this topic, or as I stop this video, I know for sure you have mastered something. You now know what the auditor's independence involves and what threats or safeguards or how to evaluate significance, all of that. And you also did some bit of audit process as a recap. So all of that is what makes you master the topic that you're doing today. As we move on with the lectures on the next lesson, we're going to start off with the preliminary engagement activities. We're going to discuss them in detail. Remember, what did we say about preliminary engagement activities? Preliminary engagement activities is all about the activities that are involved, that are done when we decide whether to accept a client or not. Okay, so what we're doing today in topic 1, it wasn't to do with the audit process as per se. It was all to do with mostly the auditor himself, him or herself, what type of mentality or things that they face, or what type of behavior or personality, or what's expected of them ideally. So as we move on to topic 2, which is preliminary engagement activities, now we're going to dig deeper now and try and understand what are the actual things that are done. Like I said, there's 4 things or 4 steps, or some summarize as 3 steps that you do, but it's got to do with evaluating if we have enough resources, the integrity of the client, and then also putting these things in writing in a form of an engagement letter. In an exam, they can give you an engagement letter, and then you must be able to identify if it has all the characteristics that are expected in that letter, or you can identify the shortfalls that are not there. So yeah, next lecture will be very interesting. So I look forward to meeting you guys again. Thank you so much for paying attention and bearing with me. If you have any questions, please feel free to get in touch with me, and then I can be able to assist you and answer as much as I can. So today's lecture, I can safely say we did justice to it. Thank you so much, and have a great week.